So, Jason, now you're in Merranti. How long have you been there?
So we've 11 years we've had Merranti.
11 years, okay. And just from a value proposition side, from a marketing side, we've had a lot of discussions around this. And I've done some other research for other clients in the accounting, bookkeeping side of things. And you do management accounts, you do, VAT returns, all of that kind of jazz. As a proposition to your clients, you talk about doing things differently and having different approaches. What are those, and how did you position those to be, as you said, very different to everyone else?
That's another easy one that is the vein of Steve's life. We don't run our business. We don't let the accountants run our business. We run the business, from my perspective, as having been a business owner. And so, as a business owner, I want this. And the way we then badge this up, and a lot of companies really could, we spoke about this before. Perception, perspective. The issue is the client's perspective of what they're buying is generally a solution to their problem. We're compliance. So in other words, they're buying something they don't want. They're buying something that they have to have in compliance.
Yeah.
Yes, they will want monthly figures. They want to know how they're doing, what they're earning. But the reality is, if there was no HMRC and no taxman, and you didn't have to supply accounts, it wouldn't be, there would be a number of clients don't want that. When they come to you and they're looking to buy end-of-year accounts, they will say the words, I want you to do my accounts.
But what are they really wanting?
So the accountants are then providing all the compliant aspects. And so we will do the end-of-year accounts, we'll put your VAT return in, we'll get all your deadlines done. We take that worry away from you, which is a genuine concern for clients.
Yes.
We take those deadlines on. We screw up, that's our fine, that's not yours if you're giving us the information. But that's the easy part. Every accountant does that.
Yeah.
What time frame they do it and how quick they do it, that's always the contentious part. But the client never really kind of thought they were buying that. What they thought they were buying was you doing the accounts and looking at it and making sure I can claim for everything I possibly can, legally claim for, to reduce my tax bill as much as it possibly can, within the rules, without me having to ask you to.
Yeah.
And every account says they do that. There's various levels of doing that. So one of the things that we insist upon is talking to the client before we start their accounts. Because we may start talking to a client and the client may say, oh yeah, no, I've just put a garden office in, or no, I've just bought this new tool, or, actually I've just done some business with someone in Spain, or they will come up and say something. We go, oh, hold on a second. So did you claim for that? No, I didn't think I could. Well, okay, what about this? And that conversation, as simple as it sounds, generates more knowledge about the person's company and how they are and how they act and what their concerns are and where it's cash flow or, and another question that accountants very rarely ask is, when's your mortgage due? Because, if we know when your mortgage is due, we know that your profit needs to be certain levels, and we'll coach you and help you to make sure that your accounts, through you supplying all the figures and doing the work, hits where you need it to be. Whereas if you say my mortgage is not due for 5 years, we may say, well, actually, you could save tax this by reinvesting into the business. Let's put some in a pension. Or, the finding out what the client's objective is and delivering on that objective aligns you with what the client wants, as opposed to, we'll do your end-of-year accounts. So that's point one. The second point is we talk to our clients about the year they're in.
Rather than the year that is passed.
Oh, yeah. So,
you're reporting for.
Your end of year, let's say December, you don't have to do your accounts till September. Now, we want to get them done in the first 3 months because then I'm giving you information that's actually of some use to you.
Yeah.
If I give you those accounts in September, you have a little chance to change them, little chance to do anything about them, and they have really actually little interest because 9 months has already gone through.
So it's a mix between accounting and bookkeeping. And
Yeah,
keeping up to
we do
date.
the bookkeeping for clients as well, so that's not an issue. We're up to date with that, and they don't have to worry about it. Generally because it's cheaper to pay us and then let them get on with their job.
Yeah.
And so talking to a client between December and September, we do anyway to talk about their accounts.
Yeah.
But we have another conversation between the January and December, and we'll say,
Where are you getting?
how's it going?
Yeah.
What's your figures?
Yeah.
Now, once upon a time, you do management accounts, which really became quite expensive for people. But with AI, we have AI systems now that if we're doing a bookkeeping for someone, we can do management accounts in seconds.
Yes.
So you're not really paying for them anymore. What you're paying for is to have the conversation with us. We can go through those management accounts and we can say, we can give you ideas of you're earning, your director's loan's going to be too high. You're earning really well. This is what your potential profit is. Should we do something about that? But you can really only do that in the year you're in. As soon as you're starting to talk about that after, I will say, or the accountant will say, why did you do that? And the client's answer, I give the answer all the time of, well, why didn't you tell me not to do that?
Yeah. Well, I can really vouch for that because being a client of yours, going from month to month, when we started, for some reason in my mind, I thought I was going on the 16% VAT basis because that was, and I was speaking to Jack and we were just double checking where we are and how much VAT is due because I was saving for my VAT and I'm like, well, that's not as much. I've saved a lot more. How come we have less VAT to pay? I thought I was on the 16%. He said, well, we were just checking if it's 16% or the normal percent, and we found that was better for you. And I'm like, that's amazing because I'm paying less.
But
or